So today we're joined with Ali Mehdi. He's a senior manager at PwC's Academy. He's also head of tax at the Academy, and also with Shraddha, who's a manager and part of the corporate tax team. So first question to Ali, with the implementation of the federal decree law on corporate tax, what were the key lessons learned from the first year of implementing?
That's a very good question, Dalia. I think the first one and the most important learning is the importance of being proactive. The quicker you are and how fast you can anticipate things really helps you in transitioning. And it's a common learning that we had from VAT earlier and now with corporate tax as well, is that taking quick decisions in line with the legislation really helps. And sometimes, of course, there are areas where you have to take a position. So for example, there may be certain areas in the legislation where you may need to take a certain viewpoint. Mm-hmm. And I think in the first year, a lot of companies have in a way established what viewpoints they are taking, and some of them, as much as possible, have also given their consultations to the ministry in terms of what they expect or what experiences they're having with corporate tax. So it's been an interesting first year, and from a training perspective, for a lot of people, it was probably a bit difficult to see the difference between direct and indirect taxes, especially those who were coming from a VAT background. A lot of our tax agents are from a VAT background, and for them transitioning to corporate tax, it was an enhanced learning. So I think from the law coming out all the way to now, that has been a main part of learning, understanding the impacts of corporate tax as opposed to other taxes.
That's a really good point, because my next question was actually, what are the key differences that you saw between training VAT and then training corporate tax?
Wow, so I got myself in that. Okay, so it's an interesting question if you look at both of them in their specific context. So VAT came out at a point where there was no federal tax in the country. That was back in 2018, and that was a monumental change to go from a country, okay, you had some duties, you had some levies here and there, you had some fees, but you didn't really have a federal level tax. So for a country from a basically pure no tax regime to going to a full tax regime, that was a big change, psychologically, I would say. But if you ask me personally, from an impact on businesses point of view, I feel that corporate tax really goes out into the P&L, and it's a real business decision as to how you manage corporate tax. And I see personally the implications wider than that for VAT. But your thoughts on that as well, Shraddha?
Well, that's actually true. While we introduced VAT, it was already present, so people knew, okay, there's something coming. But when corporate tax came out, that was like the second biggest tax for UAE, which was part of all the international practices. So it was going to come, but will it come in the next 5 years of introduction of VAT? No one knew, but it was a very good change that they brought in.
Yeah. Yep. And just moving on from your comment, what were the key concerns that you saw coming out from your own clients?
So the key concerns that we noticed when corporate tax was issued is, what is the impact of that on our business? Like we said, like how Ali mentioned, VAT was there, people trained themselves and then got accustomed to it. Now suddenly there was a new tax introduced and they had to get accustomed to that again. So what was the impact? They wanted to understand, how is it financially impacting? Do I need to change my business operation, the procedures to comply with it? What are the compliances that I need to take? How does my systems have to be upgraded? So that was a big change and impact that the businesses were looking at and were asked to undertake and help them in understanding.
Okay. And what kind of advice would you have given like your clients in terms of exemptions, tax incentives? Was that kind of like a key topic that came up?
Yes, so as a part of the federal law, they also introduced certain incentives based on locations, the activities that you carry out. So what we did is we used to undertake a thorough impact assessment for the clients that led to us understanding what are the business activities that the clients are doing. How does that fall within the exemptions available under the law? How is that impacting? What is the things that we need to ensure going forward we do so that we continue complying with it and benefit from the exemption? Of course, all of us ensure that it is done within the boundaries of the law and not doing anything, and how we want to implement it going forward. So we assisted clients in understanding these are the procedures to be done, how the systems have to be changed so we achieve this business operating model changing, and how we can achieve what the incentives want us to achieve.
Good point.
Yeah, thank you. And what kind of unique points have you actually come across, maybe from any of your clients that are startup businesses or smaller businesses? Have there been any unique kind of traits that you've seen?
So when it came to startups and small businesses, their main concern was they do have a lot of cash outflow. Like they are all debt intensive businesses.
True. Yeah.
So how does the debt intensive business impact my business operation and the impact that I will have on corporate tax for it? So they wanted to understand, do I need to change my funding model, change to pure equity funding, or should I change into a debt or equity funding? How does my business operation, do I fall under some sort of, again, like the exemption that are available? We do have qualifying business exemption, my free zone exemptions. If I move into a free zone, will that help? What are the other considerations? So we did do a detailed analysis for these entities, and another concern for them is because they're small businesses, a lot of their systems are not yet updated to ensure that when the compliance period ticks in, which for majority of the entities is going to be from 25 onwards, how do they be ready for that? Because a system change is not easy to be implemented.
True.
So we did a system analysis to say, okay, these are the documentation or requirements we need from a system perspective that will help you ease your compliance.
Yeah.
And I think one of the very interesting points Shraddha mentioned is how companies were looking at moving to equity or debt-based financing based on their requirements. And to go to your previous question about VAT, you did not strategically look at questions like that with VAT because, as we were discussing, the impact of corporate tax is much wider. It's a much bigger boardroom level discussion as compared to VAT or any other indirect tax for that matter. But one thing interesting, Shraddha, is how's the perception of small business relief? Because we understand it's a massive incentive they're given, but how do you see the SMEs looking at that?
So, when the first time it got introduced, everyone was of the view that you don't have to do any compliance if you're a small business relief. So, which felt like a big relief for those entities. But ideally, there is still compliance requirement,
True.
but it is less burdensome. So, of course, the compliance requirements have not yet been released, like the return format, the documentation requirements. They've not yet been released by the FTA, but more or less, it is going to be a simpler return. They have to take a registration, but a simpler return of filing their documentation. So they don't have to have a detailed computation backing up their returns. Financial statements may not necessarily have to be audited because they're going to be below the threshold. So it's a little less burdensome as compared to another big mid-size or a multinational group.
Yeah, and I think they have some relief on the DP documentation as well, yes. which is great. And I mean, as I think your question originally was about small business, so there is although a specific relief in the legislation for small businesses, but that's kind of optional as well. So you may have to also weigh in. Yeah. I think that's a decision to take from this year as well. Yeah. Do you really want to go ahead with a small business relief, or you might as well just get taxed like everyone else does?
Yeah. And just I think one last question here is, of course, we've been talking about corporate tax, but it goes like hand in hand with IFRS and accounting. How do you see that actually taking place from like a training point of view, and also with working with like other teams in terms of the accounting teams, the audit teams as well within our firm?
I think so when we started delivering the corporate tax diploma, and as a matter of fact, going back to the time of the consultation document, and the consultation document talked about the IFRS and it talked about EBITDA, and I was like, all right, buddy, anyone who needs to do this needs to have a good understanding in accounting. And that became more clear when we actually started delivering. When we delivered the corporate tax diploma for the first time, I had to explain to what a P&L is, what EBITDA is, what is the IFRS, how it differentiates from other accounting standards. I had to go through all of that. And then it was decided that let's increase the time for the corporate tax diploma and put a mandatory accounting refresher. Because you need an accounting and IFRS knowledge in order to properly understand corporate tax. If there are gaps in your accounting knowledge, or if there are gaps in your understanding of financial reporting, you will struggle with corporate tax. And that's basically a conclusion that I've reached over the time that I've taught all these people. Yeah.
Yeah, I mean, I've had it so many times where like we'd be talking to students, and the first thing is they say is like, well, how much do I need to know in terms of accounting? My answer is you need to know everything.
Yeah,
really, to be able to incorporate that into your corporate tax.
So to add, I think once the federal law was released, the full copy, we actually did have a training with Ali and the team, wherein they gave us a refresher. Even we as corporate tax team internally got a refresher on the accounting standards, because the starting point for a computation is your accounting profit. And there are so many minute concepts that help me make elections. Just to give you an example, my unrealized gains and losses. Now, that's such a broad concept for corporate tax. Now, what is unrealized? Here, they've not defined those terms. So you fall back to IFRS and understand when can something be considered as an unrealized gain or loss, and then have that treatment here. So in a lot of places, IFRS is definitely driving our decision makings and our implications. So we do fall back to the academy team for the training or the assurance team that we have within to understand a few concepts of IFRS and see how that impacts while we are doing these impact assessment for clients.
True. And let's not even start with deferred tax at this point. So let's not even go there.
That's the hot topic.
Exactly. Yeah. Right.
Well, that concludes everything for us for today. Thank you so much for my guests.
Thank you, Dalia. Thank you so much, Shraddha. Thank you.
Thank you, Ali.
Great.
Thank
Dalia,
you
thank you so much.
Thank you.